Good afternoon, everyone. My name is Stanley Tan. I'm an analyst at the MISO DEX. Welcome to the 2015-2016 Winter Outlook from MISO. So today, basically, what we're going to be talking about is that we're going to definitely talk about the weather trend for the winter. We'll talk about, do a quick rundown for the fall this year. We're also going to be looking back last winter demand price. We're also going to be looking into some of the main transmission changes for the winter. Lastly, we're just going to talk about some of the natural gas assessment this winter, mostly importantly just the Rockies Express line. So basically for this webinar, there's no dial-in. You have to join by a link, which you probably received it a long time ago. Also, towards the end of the webinar, there is a survey. If you can take maybe like 20 seconds to finish it, I believe there are 3 questions. That would be awesome. All right, so let's just get into the webinar. Basically, like I mentioned, our agenda, we're going to be looking at winter 2014-15. We're going to take a quick look at what's going to happen this winter in terms of the weather trend, generation outlook, transmission congestion analysis. We'll also be looking at the gas assessment, and lastly, we'll just be doing a quick summary. So today with me, I have our analysts with me. They are Cy McGiddy, Parker Cox, Terry Legg, and Jefferson Road. All right, so first let's talk about what happened last winter, 2014-15, regarding the hub settle, what actually came in for the actual demand.
Hey, good afternoon, everybody. Okay, so looking at the fall, the previous 3 months that we've had, I would say the dominant factor that we've seen so far is just, especially in November and October, has been the weak load and therefore the weak prices. You can take a look at these average peak RTO demands and also the sub-regional levels, and then therefore, and also the Indy Hub real-time settles, all very cheap. September, we did get the tail end of some of the stronger summer load and that cooling load, and that's reflected in, again, that higher average peaks and higher average Indy real-time settles. Moving in, nothing really too interesting here in terms of the peaks. Again, and I'd say the big factor is that this lack of load is really going to dominate our presentation as we move forward and talk about the risks moving into the winter. Looking back at the winter of 14-15, we actually had a very similar start to the winter in terms of the lower load. In fact, December was very low, and then as we got into January, we started to see some stronger load, and by the time we got into February, you can see our average RTO demand level got up to 94 gigs. Prices are also reflected there. You can see those averages start to tick up, especially as we got into February. Our real-time settle average was up to over $44. The other interesting thing to look at is the gas prices. As you can see, gas prices were, for that winter, strongest in February, though compared to where we've seen gas prices the last couple of months here, and also for the year in general, they were expensive relative to what we've seen and what we're going to expect moving into next winter. The one thing to note is, you had, in February, you had a big spurt of stronger gas prices and stronger prices towards the end there, as we had some late end of winter heating load, and that's reflected in, again, that higher gas price. February 19th, we saw the settle move up above $128 and a gas price over $11. So, just a quick look at some of the real-time and day-ahead constraints we saw. These are the top real-time constraints of the 14-15 winter. Nothing too crazy here, nothing that's unusual. Mostly patterns that we're expecting to see again this winter. You see here Adams transformer, that's again mostly driven by wind generation. Wind generation, as our meteorologist Jeff will get into, is expected to peak in January as it typically does. You also have Oak Grove to Galesburg, another wind-driven type constraint. West Frankfort, type congestion there. It was also just the classic MISO central congestion between Illinois and Indiana. South saw a very similar set of constraints to what we've been seeing already this year and what we're expecting to see moving forward. Parker will discuss this to a certain degree, but volunteer to fifth span and Ringgold to sales, all stuff we expect to see moving into this winter. These are the day-ahead constraints, pretty much identical to the real-time. You can see different prices, obviously, in different counts, but the dominant real-time constraints and the dominant day-ahead constraints matched up very well. So nothing kind of mismatched between the two markets last winter.
All right, next we'll have Jefferson to kind of talk about what we're anticipating for the winter. There you go.
So this slide is just briefly recapping what Cy just talked about in terms of what our peaks were last winter, and I've also included the monthly peaks here that we saw the winter previous, 2013-2014, for some contrast. So we started off on a slow demand slope with December coming in well above average in terms of temperature. 92.6 gigs, which was nearly 4 gigs weaker than the previous winter. Colder air started to work into the footprint, and we set a peak in January at 106 gigs, although that was still nearly 3 gigs weaker than the record-setting winter of 2013 and 2014. And then February actually was the coldest month in terms of difference from average across the footprint. We set a peak load in February of 100.6 gigs, although that was still a bit weaker than the February of the previous winter. And like I said, the overall pattern started off on the warmer side, and then we really accelerated into the end of the winter with a well below average February. And the winter as a whole was cold, but did not approach the near record cold of the previous winter, and that's mostly thanks to the warm December eroding heating load. So as we move into this current heating season, which unofficially gets started off in the beginning of November, what I've done here is just wanted to show some contrast between what we've seen so far this year to what we saw the previous heating season here. As we can see the graph, demand so far this year, including actuals and forecast in the blue and the orange, is coming in well below the levels that we saw for the same period a year ago. And that can be attributed directly to the much warmer than average temperature pattern that we've seen for the MISO footprint in November into December. And the LMP prices are on the lower axis there, and can show the difference between what we saw with Indy Hub prices in the real-time 2014 compared to the same period thus far this year. And we can see that we've been significantly cheaper at Indy Hub since the heating season began at November 1st there. Part of that can be attributed to the weak demand, and part of it can be attributed to much weaker gas prices year over year. And as we get towards the end of the month of December, we'll start to see the holiday influenced demand to the downside, and we really aren't expecting much breakout in terms of demand or prices through the end of the year. So we'll be waiting until January and February at this point. This graphic here just shows basically a synopsis of the way that the heating season would typically unfold for the MISO footprint, with temperatures peaking at some point in or bottoming out rather, in some point in the mid-January time frame. Peak demand usually occurs mid-December to mid-January. Given what we've seen so far this year, we are pushing our peak demand expectation for the winter season towards mid-January, mid to late January, in fact. The coldest temperatures usually occur in the middle of January, and the winter peak will almost always occur on a Monday through Thursday. Based on the past patterns, like I said, we're looking for mid to late January for peak load this year, and we're expecting it to come in a bit weaker than what we saw last winter, in the low 100 gigawatt range, 102, 103 gigawatts. So just going into our temperature and outlook for the winter of 2015, 2016, we're already well into December at this point, and we had expected and verified reasonably well with warmer than average temperatures across much of the Midwest, which is suppressing demand. We look at the pattern driven mostly by El Nino at this point, which for the remainder of the winter is expected to bring warmer than average temperatures to the Midwest with cooler than average influences across the MISO South. If we sort of look forward to the late winter, that would be our best opportunity to see some colder risks perhaps manifest into the Midwest. But at this point, like I said before, we're expecting the winter to be warmer on a whole than the previous two winters, certainly. And here are just the month-to-month maps. December nearly complete at this point in terms of observed and forecast, and then looking for warmer than average anomalies across the Midwest right and through until February at this point, with a bit cooler risk developing towards February.
All right, we're going to look at how generation is going to be looking like for the winter, mostly just about the wind. We still have JR with us.
So just real quickly here, looking at historical wind, the winter season typically sees the strongest generation this time of year, late January into February here. Wind over the northern part of the footprint usually holding a edge over central wind in terms of capacity factor. And then just our outlook for the time, given the El Nino pattern, expecting a slightly weaker than average winter wind generation through the footprint, particularly across the northern portion of the footprint, the northern wind farms.
Thank you, Jefferson. Next, we will be looking at transmission congestion. We typically do look at MISO South, MISO Midwest. So this year we're also going to be looking at some of that stuff for the winter. So we have Parker with us.
Taking a look at a few of our favorite hub movers for this winter. Our first of the group, probably our favorite one is volunteer to FIP spin. A few things going on here. Right now, currently we have Sequoia 2 out for refueling, so the risk might seem especially low, but this unit has been out for a month. These outages typically last a little over a month, so by January I would certainly expect that unit to be back online. Additionally, Watts Bar 2 is currently loading fuel. They're expecting generation there in the next few weeks, although not fully operational until spring. Even though we're expecting, a slightly warmer than average January, we do expect this generation to more than offset that weaker demand, ultimately driving volunteer to FIP spend as we have seen in the winter the past couple years. Moving down south, first I want to mention this Mansfield to Wallace. The picture shown is for Ringgold transformer. The main difference between the two is that Mansfield to Wallace puts downside on Texas Hub. We do still like Ringgold transformer. The outages scheduled in the Carrollton to Messick area that drove Ringgold last winter were originally scheduled out through June. Those outages were rescheduled to end on December 18th. So from then and for, I guess, through January, we're left with the outage at Ada to Minden. With this, whereas power would typically flow up through Ada to Minden, stepping up at Sarepta, and ultimately ending up in the city of Shreveport, instead more power is forced to come across Mansfield to Wallace and Dolett Hills to Shreveport with the same destination. Moving a little further up north, Nelson to electric. This is also a pretty common constraint in the winter. Due to the size of Chicago, ComEd typically sees commonly sees a significant increase in load, more so than Minneapolis, for example. This results in very strong flows from the Iowa area, especially when the wind is blowing. For the first winter ever, Nelson Energy will be available, and it's expected to be running due to the stronger pricing, expected due to the stronger demand, as well as weak gas prices. This puts an additional 600 megawatts on that Nelson to electric line. And finally, all the way up north. While demand in ComEd will certainly be pulling power from central and east Iowa, as you move further north into north and west Iowa, where more of the wind farms are located, and close to Minneapolis, everything starts flowing in that direction. Also contributing to this pattern, Canada gets significantly colder, of course, reducing the imports we would expect to see from Manitoba, which for Power RT users can be seen on Risota Forbes. In this case, the outage on Lakefield to Fox Lake is simply the cherry on top, putting slightly more pressure on that Lakefield to Lakefield Gen branch we would already expect to see binding this winter.
Right. Thanks, Parker. We'll be looking at winter natural gas assessment, and we will have Sai again to kind of walk us over about what happened last year, what's the anticipation for this year, and some of the more specific stuff about the Rockies Express line.
So this graphic, both these graphics are actually going to give us a kind of some context as to what happened the last two winters. The first one here on the left shows what happened 2 winters ago, the 13-14 winter, and then also the 14-15 winter. So you can see the polar vortex and the crazy results, which were because of that those extreme heating load. You see the gas prices and also the Indy Hub prices just rocket through the roof there over that time period. This past the winter, we also had a little bit of volatility, but as you see, it's just that one little blip at the end of the very tail end of the year there, as we got some stronger heating load at the end of February, and that really is the first time we really saw any extremely strong gas pricing the previous winter. And as we move into the next year, we expect that trend to really continue. As you can see already, the 2015 year has settled very, very cheaply, 2.78 million British thermal units on average so far. That's way below average, and you can kind of just visually see that there on the left-hand chart there, where the green line is trending. It's just downward trend over the last 2 years. Looking at this slide here, the first thing to think about is where are storage inventories. They're very robust as we move into the heating season here. At the kind of the top of where we might expect heat inventories to be. So very healthy moving in there. Also, Canadian storage is also very healthy. So that should also be able to resupply the market if we do get to see a stretch of strong heating load. Inventories are at very high levels, and even if so we have 2 scenarios painted out here on this graphic on the left. On the right. A weak scenario and a strong scenario in terms of natural gas demand. And even with the strong scenario in terms of usage, we still see inventories coming in inside of the 5-year average. So not expecting to get pushed out of any zone of healthy storage. That fact alone suggests that there's going to be very cheap natural gas prices. The other factor to consider is that, again, as Jefferson mentioned earlier, that we're just going to be seeing very weak load this year. We've seen that already in December, and our natural gas prices have reflected that already through this first half of December, with prices averaging about $2.20. So very cheap already, way below what we saw in December of last year, and also obviously even beyond then in the past. So cheap going into the year already, strong, healthy supplies, and as Jefferson noted, very weak demand expectations all across the board should help keep natural gas prices down. One of the factors, of course, is that U.S. natural gas market is very well supplied across the country. Natural gas production is up. Marcellus and Utica shales, in particular, have helped supply the MISO region. And that kind of gets into the last part of this, which is the Rockies Express pipeline. This is a big pipeline, 1,700 miles long, connecting Colorado and into eastern Ohio. Initially designed to move gas west to east, and now it's been reversed to move gas from the Marcellus and Utica shale into the Chicago region. Those regions have been big producers and have traditionally been unable to get their gas out of the producing regions into the consuming regions. With the turnaround of this pipeline, which was conducted this year, we're now able to supply the big load centers, Chicago, Detroit, in particular Indianapolis as well, in MISO with more natural gas and keep those prices down. We're already moving almost 1.8 billion cubic feet of gas a day in terms of the capacity of that pipeline. So a lot of capacity, plenty of ability to move gas from the producing regions into the consuming regions, and that's also going to help keep inventories very high.
To wrap things up here, I'd like to thank you all for joining us today and leave you with a few key takeaways. First, a near record strength El Nino should result in a warmer than average Midwest with a cooler than average South. Also, seasonal wind generation strength in MISO North will cause that portion of the footprint to be highly congested as usual. Additionally, wind generation in the West, this same wind generation in the West, along with strong demand at the load centers in the East, favors upside in MISO Central with our favorite risks of the year as Volunteer to Phipps Bend and Nelson to Electric. And finally, for nat gas, the Rockies Express pipeline, healthy storage, and a mild winter should result in soft gas prices across the Midwest.
All right, I think that's pretty much it for our winter outlook. We're just going to be taking a quick look at the questions and see if we have anything so far. All right, I have one here. So this is either a question for Parker or Cy or Jefferson. So you guys have kind of went over the congestion picks for the winter. I guess regarding to there, we typically see a lot of congestion in between the PJM and MISO border. I guess other than the Volunteer to Phipps Bend, what's your other favorite risk for the winter? And what do you think that would do to the hub?
In the area, I mean, this is a little more west of there. We typically see congestion in like the Bunsenville to Eugene, Casey to Breed area, or even east to west Frankfort to Franklin. Typically, there's some sort of outage that gives us indication as to which of those will bind. On top of this, a little closer to PJM, I think Batesville to Hubble is a risk as long as generation remains weak in Cincinnati. Of course, if East Bend comes back online and Zimmer ramps back up, that risk quickly diminishes.
Yeah, and I'd follow up on that saying, despite it not necessarily being on the border, a lot of those Illinois to Indiana seam constraints, Bunsenville to Eugene, Casey to Breed, Newton to Robinson, those type of constraints tend to get affected and amplified by demand strength in PJM. So even though those aren't necessarily on the seam of the eastern edge of Indiana, when you see Ohio load really start to pick up, Cincinnati, those load centers soak up some more flow. It'll pull flows across the footprint and start to bind more congestion in other parts of MISO Central. So it's important to take thinking about what's going to happen on a day-to-day basis in MISO Central, take a look at PJM load, especially in Ohio and those load centers, because those will pull a lot of flow to the east and tend to have a big impact on congestion in the region.
All right, we've got another weather-related question. What impact will El Nino have on MISO North wind generation?
So as we highlighted briefly in the slide there, expecting it to have a bit of a downside impact on wind generation this winter compared to past winters or to average winters. The pattern just a little less stormy and with a little less potential for to be reaching peak capacity across the northern wind farms.
All right, I think that's all the questions that we have got so far. Of course, feel free to send over any leftover questions to us in the form of email, and we will definitely be able to answer to those questions. Also, all the presentation will be sent out as a PDF to you guys, and there's also going to be a recording sent to you at the same time. So again, thanks everybody for joining us for today's webinar. We'll definitely see you guys around during our next webinar. Have a great afternoon. Bye.